Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into a pretty significant research report. It's from JP Morgan Securities China Company Limited, just out on August 14th, 2025. They've initiated overweight coverage on China Unicom.
That's right, and they're calling it an alpha stock among the major Chinese telcos. The report really focuses on its outperformance and a strategic shift that's underway, moving beyond just connectivity.
Towards digital services, yeah.
Exactly. It's interesting how they're structuring this. They basically have two main business segments. First, the traditional core, connectivity and communications, or CC.
Okay.
That made up about 76% of their 2024 service revenue, so still the biggest piece.
And the numbers there.
Around 261 billion RMB. This covers their mobile network, 339 million subscribers.
Yeah.
And almost complete 99% 5G population coverage.
That's expensive.
It is. Plus 120 million fixed broadband users using that fiber to the room, FTTR tech.
Right, the super fast fiber directly into buildings.
Precisely. And also a huge number of IoT connections, about 620 million. Now, this traditional part, it's projected for, well, modest growth, about 1% revenue growth in 2025.
So stable, but not exactly explosive growth there. Where's the new momentum coming from?
That brings us to the second segment, computing and digital smart applications, CDSA. This is explicitly called out as their new growth engine.
Okay.
It was 24% of service revenue in 2024. That's about 82 billion RMB, and it grew 10% year over year.
That's significant growth.
Yes, and for 2025, they expect another 9% growth, mainly driven by, you guessed it, AI demand.
Makes sense. What falls under CDSA?
Key parts are Unicom Cloud that pulled in 69 billion RMB and has 17 EFLOPS of intelligent computing power.
Which is a massive amount of processing capability.
Huge. Then there's industrial digitalization. They've got nearly 30,000 5G projects deployed. And also AI and data services, which generated 71 billion RMB revenue from about 37 industry-specific AI models.
What's interesting, though, is the spending shift. Overall capital expenditure, CapEx, is guided down 10% for 2025.
Right.
But investment in cloud and computing CapEx is set to jump 28%.
Yeah, that's a very clear signal. A strategic pivot, really, reallocating resources to these high-growth digital areas.
Okay, let's shift gears slightly. The report calls China Unicom an alpha stock. Why? What makes it stand out compared to, say, China Mobile or China Telecom?
Well, its market performance has been quite striking. If you look at the H share price since January 2024, it's up 108%.
Wow, 108%.
Yeah, compared to 36% for China Mobile and 67% for China Telecom over the same period. Significant outperformance.
What's underpinning that?
Several things. Higher dividend per share growth for 120% in 2024. Also, the fastest net profit growth among the big three, both in 2024 and the first quarter of 2025. Though it's fair to mention, part of that profit boost came from an accounting change, extending the depreciation life on 4G equipment.
Ah, okay. So good performance, but with a slight asterisk on some of the profit growth source.
Precisely. Still, the market clearly likes the overall story and the strategic direction. So given that strategic pivot we talked about, how exactly are these new digital drivers, the CDSA segment, really expected to shape future profits?
Right. The CDSA segment is absolutely positioned as the core driver for future profitability. That projected 9% revenue growth for 2025 compared to just 1% for the traditional side tells you a lot. And this growth is tied directly to AI demand, which they're backing up with that increased CapEx in cloud and computing.
So it moves towards higher value services.
Exactly. Higher value, potentially higher margins than the more commoditized connectivity services. It's fundamentally shifting their business model. Now, thinking about investors, especially those interested in income, what makes China Unicom, particularly its H share, look like an attractive dividend play?
It definitely has appeal on the dividend front. The yield is attractive, and while the actual payout ratio is currently lower than its peers, JP Morgan projects this ratio will increase. The key point is that this has resulted in the fastest growth in dividend per share among the big three telcos over the last 4 years. Consistency matters there.
I see. Growth in the dividend itself.
Correct. And the report specifically prefers the H share, the one listed in Hong Kong, 762 HK, over the A share in mainland China, 650 CH.
Why the preference?
Primarily the projected dividend yield. It's higher for the H share, 4.9% versus 3.3% for the A share based on projections. So more attractive for income seekers.
Okay, let's bring this closer to home. For you listening and for businesses, what does all this actually mean? How do these trends impact daily life or operations? Well, think about China Unicom expanding its 5G coverage and rolling out that fiber to the room technology that directly translates to better mobile signals, faster home and office internet for you,
Right. It enhances your digital experience.
and makes businesses potentially more efficient.
Definitely. And beyond just speed, the growth in that computing digital smart applications segment, CDSA, means more tangible changes. Think advanced industrial automation in factories, smarter healthcare platforms, better data security solutions. These are all built on the kind of infrastructure and AI capabilities we've been discussing.
So it enables that broader digital transformation we hear so much about.
Exactly. It impacts everything from manufacturing to public services.
So, wrapping up, the JP Morgan report really highlights China Unicom actively reshaping itself in a fast-moving market. It makes you consider how this focused shift towards digital apps and AI might not just change Unicom, but could redefine the role of the entire telecom sector in the economy. What new innovations might spring from this kind of sustained investment in smart infrastructure? Something to think about.